So we're going to talk about some sports here?
Let's go.
Quite an afternoon. First of all, thank you both for being here. I can't think of a better time discussion for both of you, especially for you, Josh. After the season that you've had, we're going to talk about Commanders. We're going to talk about the sports ecosystem. I will say, to set the table for this audience, you know, many of whom I'm sure are interested in broadly the sports investment opportunity, it's interesting to think about the two of you coming at this opportunity from different angles in broad strokes. Largely focused on ownership, Josh. George, given your operating background, really looking more at the ecosystem of sports. And there's some nice overlap with the two of you that we'll talk about. Josh, I want to start with you because many of us, because it's the most popular sport in America and second most popular in the world, I believe, watched your game on Sunday. I'm sorry. But unbelievable season. I don't need you to break down the X's and O's, but I would love to understand on behalf of this audience, what's the biggest business lesson you take from year two at the Commanders and a year that I don't think many people expected in terms of success on the field?
Yeah, so I think that sports and business have a lot of similarities. I think that in sports and in business, I think setting a big vision and a mission. In the case of the Commanders, it was to massively change the trajectory of the franchise in terms of winning. In sports, your currency is winning and memories. So winning championship memories. In investing, it's alpha and generating and stock price generating returns. They're different currencies. But in both cases, you set a big vision, and then it's about culture, talent, and people. It's about changing the culture and taking the existing people that are working in a business or on the sports side and getting them to believe again, and then raising the bar. And then it's about and achieving excellence, right? And say, okay, well, our job is to excellence on the field, excellence off the field. That's our job, and it's going to be hard, but we want you to be with us. And if you don't want to be with us, we totally understand. We're going to give you time to sort all that out. And then it's about raising the bar, and then it's about making it bigger than yourself, right? And in our case, investing, you're a steward of capital, and you're trying to generate alpha for others. And in our case, in Washington, I'm a steward. Even though I own the team, I look at myself as a steward for the city. I'm doing this for the city, and all of us are doing it for the city. And whether you're the person who takes tickets or does the parking or serves the food, or you're a player, we're all in this for the city, to win for the city and to create incredible memories and incredible community for the city of Washington. And so that's what we did. And we brought in new people. We brought in a new GM, Adam Peters. He's killed it. We brought in a new coach, Dan Quinn, and they in turn brought in a whole group of people that were used to winning. And then obviously we changed over more than half the roster. Obviously, then we had to execute in the draft and free agency. I mean, obviously Adam, led by Adam and Dan, they did both. And certainly, it wasn't, netting Jaden was an absolute home run, and you've got to give credit to the incredible quarterback we now have. But they, from the very beginning of that draft, we had the second pick. We didn't have the first pick. And they focused on Jaden, and they knew that's who they wanted. And then obviously we turned a 4-13 team around, and we were 12-5. And I think there's like a concert going here. Then we made a deep run into the playoffs, and so magic started to happen.
Yeah.
And so look, I think it was amazing, and I think you can do that with a business, you can do that with a sports team, and I'm just blessed to be around this team, this group of people, and the city of Washington, and the DMV at large is going crazy, and wow, what a great city. Obviously, I'm still a little stung from Sunday, and that's what being part of sports is. It's hard to get over, but I get over it by we're getting to work. I'm 2 days to grieve, and then we're getting to work and focusing on the future.
Right, and so, George, Josh hit on a lot of interesting things that give context to this investment opportunity in sports. You've seen it for a long time. And what's interesting about having the two of you on this stage again is that you both saw this pretty early. What did you see about sports, especially when you started Bruin, that made you think it was not just investable, but profitably investable at very successful multiples?
Well, I work for a financier, Ted Forsman, founder of Forsman Little. He was an early adapter, right? He invested in IMG. And I just saw that sports was very durable, recession-proof, and there were a lot of opportunities in the adjacencies, the picks and shovels part of the sports industry that could be improved like any other part of the business economy. And so these adjacencies we practiced on at IMG, and at Bruin, I knew these existed internationally. So we at Bruin, we have 8 companies that are in 24 countries. We do business in 71 countries. The only continent we don't work on is Antarctica. And so sports is very international.
Who knows?
It's very, very international. And I saw that there these businesses, we work in the lower middle market for private equity, that through better operational controls and opening up new markets, there was a lot of opportunity to create value. So that's kind of the space that we've played in. Sports has been recession-proof. I lived through the great financial crisis, understand how durable it was then. And then, of course, look how sports handled the pandemic, where we were like a hotel or a cruise liner and thrived through a very difficult period. So very durable when things are bad and has really held up over the test of time.
And so, Josh, picking up on that, I mean, the valuations have been unbelievable. You've been doing this, as alluded to, for quite some time. You and David Blitzer, your partner, you buy the Sixers, and then the New Jersey Devils. You have, a very broad portfolio across professional sports, including in the English Premier League. Talk about valuations at this moment and how you feel about them, and whether there should be any worry in this room about it feels a little bubblicious, to use a technical term.
So, I mean, obviously, we bought the Sixers in 2011. We paid $280 million. Bought the Devils in 2013. We paid $330 million. We bought Palace in 2015. We paid 225 million pounds. And then, I set the record for, I always say my credentials as a value investor are shattered. I set the record of the most expensive price ever paid for a sports team in history at just under $6 billion for the Commanders less than 2 years ago. But look, I think that what drives the valuation of sports is the massive media tailwind. So obviously we own in all the major sports. We own in a lot of the major sports and the major leagues. And what you find is that they're incredible businesses. And what's driving them is they're going from being live entertainment businesses to media businesses. And so, 17 million people watch an average NFL football game. I don't know I think the ratings probably approached 40 million. I know that in the playoff game that we against Detroit, they were north of 30 million people in the U.S. So that's 10% of the country. And so 93 of the top 100 shows are NFL football games. And in the NBA, right, more people in many cases watch the Sixers in China as do in Philly, right? So I think that you're seeing this globalization of media content, and people now can get media anywhere they want on their phone, on their tablet. And so they want to watch the best players in the world, right? So we happen to have the best players in the world in these leagues. And so you're seeing this massive growth in revenue. And also you have leagues in the US, some of the international leagues less so, right, where they're structured. They have CBAs where there's a percentage split with the players and there's a prescribed amount. And so therefore the value creation opportunity is there. And that even is the case if you go all in and you, in essence, fulfill your stewardship for a city, right? And like you can go into the luxury tax and you can spend a lot and you can create a great stadium, but the media uplift is so great that you get paid back. And so sports has been an amazing investment. I think it's going to continue. Mm-hmm. Everyone thought that the NFL was frothy when I did it. And now you're seeing private equity investing in the NFL at north of $8 billion. So our deal looks good. And I'd say that I would say there are three things. One is this media thing. The second is scarcity value. The reality is that there's only 30 or 32 or 20, depending on the league, of these teams, and people want to own them, right? And they're ultimately somewhere between a business in terms of valuation and a Basquiat or beachfront real estate. And then the last thing, obviously, is the entrance of private equity, which we can talk about.
Yeah.
That's going to push up value. So, look, I think there's a lot of tailwind. If you look at the NBA deal that they just struck, the average annual AAV, annual value of that deal, is about 2.5 times greater than the last deal. And so that's creating a lot of tailwind. And, you saw the major tech companies getting into the ecosystem. And so we could talk about that as well, but there's demand there for this media content.
Yeah. So let's try, I want to pick up exactly on that private equity point. The notion of institutional capital coming in to sports, George, is not totally new, but it coming into the NFL is. And the NFL is the big kahuna. Again, I'm using a lot of technical terms. But this notion of what the net effect has been on valuations, et cetera, what has that been from your perspective, especially as you look at the entire ecosystem?
Well, for us, it's great because, as Josh mentioned, when the NBA increases its TV value by $25 billion to $75 billion, the value of the services around it is more important. As the Philadelphia Eagles trade at $8.2 billion.
Can we use a different example?
Yeah, sorry. When they trade, well, it's good in the valuation. That's right.
That's true.
That's true.
You can still use a different example. Dolphins.
But when these teams trade at these valuations, the people providing the services that underpin them become more and more valuable. So for us, it's great. And it's still early on, I think, in sports in terms of investment. I mean, I think when you look at golf has been disrupted. You're reading a lot now about basketball, possible disruption, which really started by the threat of capital coming in. So capital is coming in a way that had never been before in sports. You're going to see more and more structured equity deals in the marketplace. So it's still relatively early stage. And as Josh said, it's highly valuable, not only in the size of the audience, but the avidity. And as things go for one-to-one relation with the consumer, I think sports is going to hit it out of the park. So there's a lot of growth. I mean,
Yeah.
You think about, Josh did a great job with the Washington football team, right? Commanders. I went to college with a bunch of guys. I can sing the Redskin fight song, right? They were checked out, now they're checked in. They're going crazy. This is a bunch of old guys going nuts on the Washington team. They love the Washington football Commanders. They love it. And, whether it's Washington or Liverpool or Alabama football, that connection point is unmatched. And in a world of fragmentation, it's going to be highly valuable.
And so I don't want to get too far away, Josh, from this notion of institutional capital coming in, because you have a long history in institutional capital. You were a co-founder of Apollo. You're one of the many things that you're doing is 26 North. You have a sort of a diversified alternative strategy there. What's the institutional case for sports, especially given these rising valuations? You jokingly, but not so jokingly, said, as a value investor, you would have passed on the Commanders as a pure value investor. So what is it that's attracting these institutions?
Yeah, so basically there's massive growth in revenue, and the leagues that the institutions are going into are the most popular sports in the world and with the biggest audience growth, and there's this insatiable demand for live content. And so increasingly, sports content and music, right, are the two things. And music doesn't really, it's harder to stream that. It's not possible, obviously. But live sports content is massively important to the cable ecosystem, to the media ecosystem, and then now to the tech companies. I mean, Amazon and others are figuring out that, hey, if I can get someone, if the only place that they're going to see the Commanders is Thursday Night Football, and I get someone to sign up for Amazon Prime, they're going to stay and keep paying that monthly fee even in the off season. That's what they're finding. And you're seeing a lot of demand for that content. So that's raising revenues, that's raising cash flow. And there's also incredible investment opportunities around that, whether it be running a concert business, whether it be stadiums, whether it be enhancing the fan experience through two-way interaction or gaming, or even we don't participate, but betting. Sports betting is a big business, and so you're seeing a need for capital. These have gone from, in essence, family businesses and smaller businesses to really big businesses with a lot of investment opportunities. And so, private equity is filling that void and getting paid for it. It's more of a growth equity story, right? It's not at 26 North, obviously. We buy cash flow. We do a little bit more what George does, which is we buy cash flow well, and we pay down debt, and we fix and we help and support companies, and then we ultimately exit at a 20+% rate of return. In sports, it's a little different than that in the sense that the growth in revenues is much higher. And for example, in the Commanders, we paid 100 times EBITDA, right? That sounds like a high multiple, but the way I would think about that is, I would reverse it. There's very low capex. It's a 2.5% cap rate for beachfront real estate, and with the media payment and everything else, we hope we can get it to a 6 or 7% cap rate. And I think that's how other people think about it too. And so it's a different value paradigm than the traditional cash flow-oriented private equity. But on the other hand, it is institutional. And what people are doing is they're saying, okay, wait a second. The Bills in 2013 went for $1.3 billion. Then David Tepper bought the Panthers for $2.4 billion. Then the Waltons came in and bought the Broncos for $4.6 billion. And then our group bought the Commanders for $6 billion. So that is a 4x in 10 years. That's better than I hate to say it, that is on par slightly. If you look at private equity and sports, when you look at the lines, the S&P has beaten private equity recently, but when you go 10 years back, you still see private equity in sports, but the NFL, right, and other sports is right up there with private equity as an alternative. And it's also correlated, right? These are, in essence, derivative of big media contracts. So, the market can go up, the market can go down, there can be a recession. The media companies are still going to make that payment. I will say, as a sports team owner, George, the pandemic was brutal for teams because even though we got some of the media payment, to a large extent, we had to. There were no fans, right? Yeah. And so it was probably almost, it was hard to manage. That was a scenario where either cash flows went negative or they went to zero in almost every sports team.
It was brutal for the guys that didn't own a team too, but.
Fair enough, it's brutal for everyone. But I'm just saying that wasn't a positive. But I do think that what you said is right, which is, it's very stable, it's correlated, and it's been great returning, and I do think it will keep going. I do.
Yeah. And so, George, panning out a little bit or widening the aperture internationally, you guys do a lot of work over there. I think about an event that's coming up here in Miami, in just a few months, the Miami Grand Prix, Formula One. You guys are an investor in Box to Box, which obviously sort of like burst onto the scene. They were doing some great work, and then everybody knew them because of Drive to Survive. As you think internationally, and you have some exposure as well, Josh, what are the opportunities, especially maybe the not so obvious opportunities that may exist either in other sports or overseas that, again, an investment-hungry group should be thinking about?
One of the interesting areas is cricket right now. That cricket is really one of the biggest sports in the world, not the NFL, but really large. And you're seeing a transformation in the UK. A massive amount of investment's going to be going into the English Cricket League. We'll see where that takes it, but that whole sport's going to be reinvented because of capital. And I do think you're seeing more and more people, the whole world is soccer. I mean, it's just, in Germany, the top three sports are soccer, and soccer. But so it remains robust. I think it's pretty bright, right? And if you look at Paris, the Paris Games were terrific. The World Cup's coming to America here in 2 years. It's going to be amazing. America's really going to get hit hard because you're going to have the World Cup, you're going to have the Olympic Games, you have this massive event no one here is even thinking about, the Rugby World Cup, then you're going to have the Olympics again. So we're going to be hosting the world here for about 10 years.
Yeah. And so, Josh, one of the areas of growth that I know you've looked at with some of your partners is youth sports. I think we've already heard and we're going to hear later from Eli Manning. I know he's invested in that area as well. You made a pretty big bet there with Cal Ripken, Shaun White, and others. What's the business case there? And again, I'm thinking about this audience, even myself. We've all spent, I dare say, a lot of money on youth sports over time, and presumably that's going to continue.
Yeah, so youth sports is incredible. I mean, obviously all of us, or many of us, have children, and obviously, although probably no one in the audience is one of those parents on the side yelling about their kid.
Definitely. In this room, no. It's very chill.
Everyone's
very
type B
chill.
personality.
Yeah.
Look, there's nothing that people won't do. Sports is as essential to American culture, and there's nothing that people won't do to, watch their kids, to help their kids. And so there's an element of most of youth sports, the experience wasn't that great, right? So what we did is we started a company called Unrivaled, which has been, a very big success. We have over 600,000 participants and over 1.1 million visitors across many sites in the U.S. And it's obviously started with baseball and Cal Ripken, but it also includes Shaun White and action sports, and now, under the lights and football, flag football. And so it's really growing. And what we're trying to do is create a great experience for the players and a great experience for the parents, also, and the visitors. But more than that, it's also a way to really help the world in a positive way, because for every one of us that are really fortunate in the audience, there are a lot of people who their parents can't afford to help them, or they can't afford to play in a summer baseball league. And so, part of what we do is we take some of the capital and earnings and invite people that are less fortunate to participate in sports. And I don't know about everyone in the audience, but for me, sports changed my life. I was a wrestler, and it really taught me about discipline and athleticism and grit. And I owe a lot to sports, right? So it's not really fair that my kids can play sports, and all the public schools are cutting programs because they can't afford it. And so we have this confluence of a really interesting profit opportunity, but also an opportunity to help the world. And that just led to this incredible growth in this company. And also what's happened is Andy Campion and this whole series of incredible managers, he was the CFO, COO of Nike, had incredible opportunities. Like, no, I want to do this.
Yeah.
And so we're able to attract an incredible management team, and we're growing very quickly. And you'll see, it's a relatively big company now, and it's going to get bigger. And then, so it's great. And then the other thing is, this is an as essential moment in women's sports.
Right.
So at some point we should, talk about that, or we should just say to the audience, like, this is, we're trying to bring a WNBA team to Philly. We're hard at work doing that, but across the board, we have a women's Premier League club, that Palace sponsors, and half the planet is women, girls, and they're coming into their own, and just the ratings are incredible, and the growth is incredible, and it's an as existential moment, and so, it's really, the values are kind of hard to get your head around, and it's like Bitcoin. You're sort of like, how do I catch up? But on the other hand, I think this is a really long-term trend, and I think it's really great for the world that we're doing this, and that there are role models. I have 2 daughters, and so it's something that I'm supporting, and that is really a big growth opportunity and investment opportunity.
Do you see that in sort of the broader ecosystem, George?
Where you really see it is women's soccer. When you look at if you go back 3 cycles on the World Cup, or you go back on the European Football Championships, it's massively more meaningfully as a commercial vehicle. When you start looking at the Premier League, and look, they filled a stadium with 80,000 people at Wembley Stadium for women's football. And of course, here in the U.S., a sport that's got some traction, I'm a little surprised about, is women's hockey.
Yeah.
Right? They're actually not rating bad. They're filling up arenas. So I think there's a traction with women's sports that's here today that wasn't before. And that's a great thing in so many different ways.
I'm going to have to flow in flag football and basketball. Yeah. Flag football is an Olympic sport now, and it's mostly played by women.
And look at the ratings of women's college basketball.
Right.
I mean, they were amazing. So I think when you look at all this, there's a real movement and traction that's never been there before.
All right, we only have a couple minutes left. I'm going to steal something from my partner, Alex Rodriguez, who I host a show, The Deal. Tune in on Bloomberg Television and also download it whenever you get your podcast. George Pyne has been featured on that show. Josh Harris will be, I'm going to say it, on an upcoming episode. Now you really have to do it. Alex does like to ask the question, what's your advice for people who essentially want to be you? And so I'm going to pose that to both of you as we wrap up. Like, what's your advice for an investor who wants to be meaningfully invested in sports, Josh?
Yeah, so I would say, this is hard, and so find something that you're really passionate about in terms of the city, that you want to spend time in. You have to really engage with the city. It's about the city. You have to be in the city. You have to do it for the city. You have to know the city. And then find a sport that you're truly passionate about. There are a lot of games, and really focus on those things that you want to really spend the time around because it's full on, and you're out there, and you're accountable, and they fine you. They will fine you. So
I was going to say there's got to be.
You really have to bring it. You really have to be top, and it's hard to win. There's a lot of smart people who want to win, and so build edges.
Yeah, I can't imagine you've ever had you ever expected to have the notoriety that you have now.
No, that would be 100% true, for good and for bad.
And George, how about for you?
I think just you want to understand, there's so many different ways you can invest in sports. So just, kind of do your homework and find the investment that meets your objectives and goals. It might be whatever that may be. It might be cash flow, it might be longer term investments, it might be a short term hold, long term hold, whatever it might be. There are a lot of different ways to invest. Do your homework, make an investment. And as Josh says, it's been durable for really 30 years, right? And so it's a very durable investment that holds up real well when times get right. So just match your objectives with the opportunity, and my guess is good things will happen.
And if you want good old-fashioned returns and alpha with a really experienced team, look us up at 26 North. Also. So, since Jason put a shameless pitch in, I thought I would.
Yeah, everybody can have a
Bruin Capital.
Yeah,
but I actually just on the investment side, we tend to stick to the bigger sports where there's a lot of tailwind. A lot of the smaller, there's a ton of sports, right? From paddle. There's always a new sport coming out every day, and there are people that are devoting their time to that. It's a different business. Those are live entertainment, more customer-oriented. I guess our business is customer-oriented too, but like less media-oriented.
Yeah.
So they're different, and so just decide which one you want to play in.
All right, well, it's blinking red on us. I want to stick to time. Thank you both so much for your time.
Thank you guys
for
listening.
listening. Thanks.